right afterwards. Stop writing this. What? I said I will explain them right afterwards. Stop writing this. We started the evaluation in the last class, right? We said the evaluation simply means you are incorporating the value of an asset to the market value. So you bought the assets today. The value of it today might have increased in the future. But whatever the value is in the future, you are incorporating the price, the market value, into it. That is revaluation. Revaluation. You are incorporating the market price, the present market price, into an asset that you purchased previously. Do you know what I just said here? You are incorporating the market price. Oh, how much is it sold now? How much did you buy it then? So how much is it sold now? The worth of it now, especially property, is what revaluation is. It has changed from the previous price to a new price. So the process of incorporating the market price of an asset that was previously purchased to the current market price is called revaluation. We talked about that previously. And one of the reasons why we do revaluation is that it allows us to have a true and fair view of our statement of financial position. It also allows us to charge depreciation on the assets, updated figure. That is revaluation. Today we want to go into how to calculate revaluation of an asset. So they said ABC Limited owned property which costs 200,000 euros and on which depreciation has been accumulated to the amount 40,000. So this is the depreciation, which is our profit and loss account. Remember, whenever I'm talking, the next time I talk, you write, I'm going to kick you out of the class. I don't like it when you put away when I'm talking. 40,000 euros. 40,000 euros is your depreciation charge, and depreciation is always going to be in your profit and loss account. I'm saying that again. Depreciation is always in the profit and loss account. Asset, the value of the asset goes to your balance sheet, which is the same as your statement of financial position. What? Statement of financial position or balance sheet. The value of the assets. The depreciation charged on it is on the profit and loss account. The difference between this and this.
Depreciation is expensive.
What? Expenses, yes, thank you. The difference between this and this is your NBV, your net book value. That is the worth of your asset now, after depreciation has been charged. That is not where we are going yet. So today we want to know how to calculate revaluation of assets. So ABC Limited has this amount, the worth of property, and depreciation charge on it is this. The first policy is to depreciate its property by 2%. So the amount of depreciation is 2% of the asset. Are you with me, please? Great. Required. Show the differences in the recording of this revaluation if ABC Limited valued the property to 250,000 euros. So the value has been increased. The value of the asset or property has increased from 200 to 250,000 euros. This is revaluation. Now we have to prepare a revaluation of asset account. This is the format of revaluation. Revaluation at the beginning of the financial year. The beginning of the financial year is beginning. Evaluation at the end of the financial year, end of the financial year. Do you get the 2 points at least? The beginning of the year, the end of the year. Evaluation 01/01/24, the beginning of the year. 31/12/24, the end of the year. Any question up to now? Good. The depreciation charge, profit and loss account. Calculate the value figure of asset. The value figure of asset is what? 250,000. At the beginning of the year, we calculate the revalued figure for depreciation. At the end of the year, we calculate the original cost, which is historic cost. Are you getting what I'm doing here, please?
Yes.
Hello. Please, whatever you do, please can you take all your bags in? I want to be seeing just your book, please. Thank you. Okay. Depreciation charge. At the beginning of the year, we charge the revalued figure. At the end of the year, we charge the historic cost. Any question about that? So the revalued is 250. So here we have depreciation. Let me just go up in here. Depreciation charged, profit and loss account. We said here we're going to calculate the revalued figure. Yes or no? The revalued is 250,000 multiplied by percentage 2/100. Do we get 2/100? 0, 0, 0, 0. 2 times 2,500. That's 5,000. Do we understand the 5,000 here? Did we get it or not? Remember we said the depreciation charge will be at the beginning of the year, the revalued figure, which is 250,000. Depreciation on it. That is it. Now at the end of the year, we charge the original, which is the historic cost. The historic cost is 200,000. 200,000 multiplied by 2/100. 0, 0.
The first cost is the original.
What?
The first cost is the original.
Yeah. At the end of the year. At the end of the year, you charge the historic cost. At the beginning of the year, the revalued figure.
What's historic cost?
Historic cost is the cost of the assets. Historic, the amount the value you bought it. Oh, I bought this building today. The cost is 500. That is historic cost. When depreciation starts going on it, the value changes. Probably or reduce, it depends. But most of property, because it is property, it is expected that the value increases over time, mostly. Any question about the first point here? So we have our depreciation value for the first one. We are preparing the evaluation of asset account. So in preparing the evaluation of asset account, the first one is the depreciation charge, which is our profit and loss account. You calculate the revalued figure at the beginning of the year, the historic figure at the end of the year. The beginning of the year for depreciation, the end of the year for depreciation. Any question up to now? Now that we are done with the depreciation charge, we go to the balance sheet, which is the cost. Balance sheet, which is the cost. So for the balance sheet, you write the revalued amount and the revalued amount. The revalued amount is how much? 250,000. So the worth of our asset right now has been said the property, the first point, okay, show the difference in the recording of this evaluation. If ABC Limited has valued the property to be what? 250,000. So the worth of our asset, both present and past, is how much? 250,000 euros. Do we understand the second point? Do we get it or not, please? Do we get it or not? I'm not hearing anything. Do we understand or not?
Yes. Yes.
This is the format, and I'm following the format. The second one.
Yeah.
Revalued amount for our balance sheet cost. The revalued amount is 250,000 euros. 250,000 euros at the beginning of the year, 250,000 euros at the end of the year. The asset has been revalued. So in our balance sheet, for 1/1/24, 31/12/24 is going to be 250,000, 250,000. Do we get that? Do we get it or not, please?
Yes.
The third one, the balance sheet depreciation. At the end of the year, we don't have depreciation for balance sheet, but at the beginning of the year, we have depreciation for balance sheet, which is this amount. Do we get it? In the format, balance sheet depreciation, none for the end of the year, because the year is ending. We don't have depreciation charge again. But at the beginning of the year, we have depreciation charge, which is the amount of the revalued. The balance sheet depreciation, balance sheet depreciation, 5,000 euros, none. Do you understand this or not, please? Any question up to now?
No.
I've not done anything different than whatever is here that I am interpreting here.
Yes.
Evaluation at the beginning of the financial year, at the end of the year. At the beginning is 1/1/24, at the end is 31/12/24.
Why do you put none in the
None. Why? Because at the end of the year, you don't have depreciation charge anymore. Depreciation is charged at the beginning of the year, not at the end of the year. Because because the year starts in January, it ends in December. Yes or no? So you want to charge depreciation at the end of December. The depreciation is supposed to be charged against your profit. Yes or no? And the profit is from each month that passes by. Do we get it? Your assets start working at the beginning of the year, not at the end of the year. So because the assets start working at the beginning of the year, the depreciation should be charged at the beginning of the year. Do we get it? Do we have any question?
No.
This is the time to ask any question. Good. So now we move on. The balance sheet evaluation will serve. Balance sheet. Balance sheet. Evaluation reserve. Now, here comes the question. We are evaluating our account, yes or no? We are evaluating the property. In the course of evaluating the property, our property has increased from the difference between the historic cost, and the revalued assets. Revalued assets. Is our reservation, is our reserve. The historic cost is 200. The valued asset is what? 250. Now we have our property has increased by 50,000. So there's increase in the value of our assets by 50,000. Do we get it or not?
Yes.
Do we understand or not, please?
Yes.
Balance sheet evaluation reserve. Increase in value plus opening depreciation. And what's the opening depreciation? The opening depreciation is this is the opening depreciation. This is the depreciation at the beginning of the year, yes or no? This is the worth of assets at the beginning of the year. So this is our opening depreciation. So increase in value plus opening depreciation is our balance sheet evaluation reserve. Our asset has increased in value by 50,000, but there's depreciation charge on it, which is the opening of 40,000. Do we get it? Any question about that? Good. So here, balance sheet evaluation reserve, we have increase in value of assets, increase in value of property. That is 50,000, right? Yes or no, please? Yes or no?
How?
Yes.
How?
50,000. 250 minus 200. 50,000. Our property has increased in value by 50,000. Is it clear now, please? Then plus opening depreciation. What is the opening depreciation?
40,000.
Depreciation at the beginning of the year. How much is it? 40,000. 40,000. Yes, please. You had. So that gives us 90,000. So this is the value of the reserve. This is our total. This is our total for 2020 for the beginning. Now the end, the increase in value again plus depreciation charge for the year. What is the depreciation charge for this year?
4,000.
At the end of the year, it is the increase in value, which is 50,000,
Yes.
plus depreciation charge for the year. Do we get it or not?
45.
What?
What is the position?
4,000 for this year. 4,000. Do you get it or not? This is it. Increase in value plus depreciation charge for the year. Depreciation charge for the year is how much? 4,000. Then we have accumulated depreciation of 40,000. So here it's going to be increase in value,
50,000.
increase in value, 50,000, right?
Yes.
Plus depreciation for the year, 4,000, right?
Yes.
Plus accumulated depreciation, 40,000, right? So the total is how much? 94,000. thousand. Do we get it or not? At the end of the year, it is 94,000. At the beginning of the year, it is
This is
Nice.
the depreciation for the whole year.
yes. At the end of the
The
year.
4,000 came because from the 2%, right?
Yeah, the percent charge. 2% of 200,000.
Ah, okay.
Do we get it now?
Yes.
So at the beginning of the year, it's 90,000. At the end of the year, it's 94,000. Is it clear?
Yes.
The only point we need to understand is the depreciation charge at the end of the year for evaluation is the accumulated depreciation for this. This is at the beginning of the year. You
Yeah.
carry the depreciation here with this to add up with the value of the asset. Any questions?
No.
Right.
Mr. Revaluation,